You know what keeps me up at night? It's not the headlines. It's what's happening in the shadows while everyone's distracted by the noise. And right now, there's something the Federal Reserve just did that changes everything for anyone holding dollars. Let me ask you something. When was the last time you saw the most powerful financial institution in the world completely reverse course on something they swore they'd never do? When was the last time they admitted, without actually saying the words, that they've lost control? Because that's exactly what just happened. And if you're not paying attention, you're about to watch your purchasing power evaporate faster than you ever thought possible. Here's what they're not telling you on the evening news. The Fed just made a move that signals they've given up on their primary mandate. They've been fighting inflation for years now, raising rates, tightening policy, telling us they're committed to bringing prices down. But something changed, something fundamental, and the smart money already knows what it means. Look at what Vice Chair Bowman said recently. She's talking about the economy continuing to grow, inflation moving closer to their goal. Sounds good, right? But here's what she's not saying. Beneath the surface, the labor market is showing cracks. The supply side is breaking down, and the Fed is trapped between two impossible choices. They can keep rates high and watch the economy collapse, or they can cut rates and watch inflation spiral out of control. There's no third option. There's no soft landing. There's only the choice between two disasters, and they just chose the one that destroys your savings. Think about what that means for a second. The Federal Reserve, the institution that controls the world's reserve currency, just blinked. They looked at the data, they looked at the pressure, and they decided that protecting the financial system matters more than protecting your purchasing power. That's not speculation. That's what their actions are telling us. Now I know what you're thinking. You're thinking this is just another doom and gloom prediction. Another person telling you the sky is falling, but I'm not asking you to take my word for it. I'm asking you to look at what the institutions are doing, not what they're saying, what they're doing. Central banks around the world are buying gold at a pace we haven't seen in decades, not slowing down, accelerating. The People's Bank of China has been adding to their reserves month after month. The Reserve Bank of India is stockpiling. Poland, Singapore, Turkey, they're all doing the same thing. These are the people who have access to information you and I will never see. And they're moving their reserves out of dollars and into physical gold. Why would they do that if everything was fine? Why would they abandon the world's reserve currency if the Fed had everything under control? Before we go further, I want to make sure you have access to something that could make a real difference in how you navigate what's coming. I put together a free guide that shows the saving secrets thousands of American retirees are using to protect their hard-earned wealth. It's in the description below. No cost, no obligation. Just information that could help you make better decisions about your financial future. Check it out when you get a chance. Now let's talk about what this means for gold and silver. Because this isn't just about the Fed losing credibility. This is about a fundamental shift in how wealth is stored and protected. And if you understand what's happening, you can position yourself ahead of the wave instead of getting crushed by it. Gold is trading near all-time highs right now. Silver is showing strength we haven't seen in years. And this isn't a bubble. This isn't speculation. This is institutions and sovereign nations repositioning for what comes next. They're not buying because they think prices will go up. They're buying because they know the alternative is worse. Let me paint you a picture of what's really happening in the gold market right now. The COMEX, the exchange where gold futures are traded, is showing something remarkable. The ratio of paper gold to physical gold has never been higher. There are claims on gold that far exceed the actual metal available for delivery. It's like a bank that's issued 10 times more deposit receipts than they have cash in the vault. It works fine until everyone shows up at the same time. And guess what? People are starting to show up. Delivery requests are increasing. The premium for physical gold over paper gold is widening. The London Bullion Market Association is seeing tightness in supply that hasn't existed in years. This is the kind of market structure that precedes a major repricing event. You want to know what happened the last time we saw this pattern? Go back to the late 70s. Gold was trading around $200 an ounce. The Fed was fighting inflation. Interest rates were rising. Everyone said gold was overpriced. And then, in less than 2 years, gold went to over $800. Not because of speculation, because the market realized that paper currency was losing its value faster than anyone wanted to admit. But here's the thing. That was when the dollar was still backed by some semblance of fiscal discipline. That was before we had $36 trillion in national debt. That was before we were running trillion-dollar deficits every single year with no plan to stop. The situation now is exponentially worse. Think about the math for a second. The United States government is spending money it doesn't have at a rate that would bankrupt any private company in months. They're financing this spending by issuing more debt. And who's buying that debt? Not foreign governments anymore. Not like they used to. China has been reducing their treasury holdings. Japan is selling. The Fed itself had to step in and become the buyer of last resort. But here's where it gets really interesting. The Fed can't keep buying treasuries without expanding their balance sheet. And expanding their balance sheet means printing more money. And printing more money means more inflation. It's a cycle that feeds on itself. And the only way out is to let interest rates rise to levels that would crash the economy, or to keep rates low and watch the currency devalue. They chose devaluation. They didn't announce it. They didn't hold a press conference. But their actions speak louder than any words. And the smart money is responding accordingly. Now let's talk about silver for a minute. Because if gold is the safe haven, silver is the opportunity that most people are completely missing. Silver has industrial applications that gold doesn't have. It's used in solar panels, electric vehicles, electronics, medical equipment. The demand for silver from industry is growing faster than supply can keep up. And unlike gold, there's no massive above-ground stockpile of silver sitting in vaults waiting to be sold. The silver market is tiny compared to gold. The entire annual silver production is worth a fraction of what gets traded in gold every single day, which means when money starts flowing into silver, the price moves fast. We saw this happen before. In 2011, silver went from around $18 an ounce to nearly $50 in a matter of months. Not because of some coordinated pump, because industrial demand met investment demand at the same time supply was constrained. And we're seeing the same setup now. Solar panel production is exploding. Electric vehicle adoption is accelerating. Every new technology seems to require more silver. Meanwhile, primary silver mines are struggling with rising costs and declining ore grades. The deficit between supply and demand is growing every year. At some point, that deficit gets priced in. And when it does, the move is going to be violent. But here's what most people don't understand about precious metals. This isn't about making a quick profit. This isn't about timing the market perfectly. This is about preserving wealth through a period of monetary chaos. It's about having assets that can't be printed, can't be devalued by central bank policy, and can't be erased by a banking crisis. Think about what happened in Cyprus back in 2013. The banks closed. People couldn't access their money. And when the banks finally reopened, deposits over a certain amount were confiscated to bail out the financial system. It was called a bail-in. And it set a precedent that terrified anyone paying attention. Because if it can happen in Cyprus, it can happen anywhere. Or look at what happened in Argentina. Inflation spiraled out of control. The peso collapsed. People who had their savings in the local currency watched their purchasing power evaporate. But the people who had gold, they preserved their wealth. They could still buy food, pay rent, survive. The metal held its value while the paper currency became worthless. This isn't ancient history. This is happening right now in different parts of the world. Turkey is dealing with massive inflation. Lebanon's currency collapsed. Venezuela's bolivar is essentially worthless. And in every single case, the people who protected themselves were the ones who got out of paper and into hard assets before the crisis hit. Now, I'm not saying the United States is going to turn into Venezuela overnight, but I am saying that the same forces that destroyed those currencies are at work here. Excessive government spending, central bank money printing, loss of confidence in the currency. The only difference is scale and timing, and the scale makes it more dangerous, not less. Here's something else that should concern you. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working to create an alternative to the dollar-based financial system. They're settling trade in their own currencies. They're building payment systems that bypass SWIFT. They're accumulating gold as a foundation for a new monetary order. This isn't conspiracy theory. This is official policy that they're announcing publicly. What happens when the world's reserve currency loses its status? What happens when countries stop needing dollars to buy oil, to settle international trade, to hold as reserves? All those dollars that are currently sitting overseas, they come flooding back home. And when they do, the inflation we've seen so far will look like nothing. The Fed knows this. The Treasury knows this. That's why they're so desperate to maintain confidence in the system. That's why they keep telling us everything is fine. Inflation is transitory. The economy is strong. Because the moment confidence breaks, the game is over. And they can't afford for that to happen. But confidence is a fragile thing. It's built on trust. And trust is built on credibility. And the Fed's credibility is hanging by a thread. They told us inflation was transitory. It wasn't. They told us they wouldn't raise rates. They did. They told us they'd keep rates high until inflation was defeated. Now they're cutting. Every time they reverse course, they lose a little more credibility. And at some point, people stop believing anything they say. That's when the real crisis begins. Not when the economy crashes, not when the stock market falls, but when people lose faith in the currency itself. Because once that faith is gone, it's almost impossible to get back. And the only assets that maintain value in that environment are the ones that don't depend on faith. Gold and silver don't require you to trust a government or a central bank. They have intrinsic value that's been recognized for thousands of years. Now, if you're sitting on retirement savings, if you have money in a 401k or an IRA, you need to understand something important. Those accounts are denominated in dollars. And if the dollar loses value, your retirement loses value with it. It doesn't matter how well your stocks perform if the currency they're priced in is collapsing. You could have $1 million in your account and still not be able to afford the retirement you planned for. That's why more and more people are looking at gold IRAs. It's a way to get physical precious metals into your retirement account without triggering taxes or penalties. You're not cashing out. You're not taking a distribution. You're just moving from paper assets to physical assets within the same tax advantage structure. And if you're sitting on $100,000 or more in retirement accounts, this is something you should at least understand. I put together a guide that explains exactly how it works, what the rules are, what the benefits and risks are. It's in the description. No pressure, no sales pitch. Just information that could help you make a more informed decision about protecting your retirement from what's coming. Worth checking out if this is relevant to your situation. Anyway, back to what's happening in the markets right now. Because there's another piece of this puzzle that most people are missing. The commercial banks, the big players who trade gold and silver futures, they've been net short these markets for years. They've been betting that prices would go down. They've been suppressing rallies, capping moves higher, keeping a lid on things. But something changed recently. Their short positions have been decreasing. They're covering. They're getting out of the way. And when the commercial banks stop fighting a market, that market tends to move hard. This is the kind of positioning that precedes major breakouts. We saw it before gold's run in the 2000s. We saw it before silver's spike in 2011. The commercials get out of the way, the technical picture clears up, and suddenly there's nothing stopping the momentum. And with everything else that's happening, the Fed's policy reversal, the geopolitical tensions, the debt crisis, the timing couldn't be more significant. Let's talk about the geopolitical situation for a minute, because this isn't just about economics. This is about power. This is about which countries control the global financial system. And that system is being challenged in ways it hasn't been since World War II. The war in Ukraine disrupted energy markets and exposed the weaponization of the dollar. Countries that thought their dollar reserves were safe realized they could be frozen or seized if they fell out of favor with Washington. That's a wake-up call that's still reverberating through central banks around the world. China is watching this very carefully. They're the world's second largest economy. They hold massive dollar reserves. And they're thinking, if it can happen to Russia, it can happen to us. So what are they doing? They're diversifying. They're buying gold. They're building alternative payment systems. They're denominating trade in yuan. They're preparing for a world where the dollar isn't the only game in town. And every step they take in that direction weakens the dollar's position. The Middle East is shifting too. Saudi Arabia, the cornerstone of the petrodollar system, is now accepting yuan for oil sales. That's not a small thing. That's a fundamental change in how global energy markets work. For 50 years, oil was priced in dollars. If you wanted to buy oil, you needed dollars. That created automatic demand for the currency. But if that system breaks down, if oil can be bought in other currencies, the demand for dollars drops. And when demand drops, value drops. This is the context in which the Fed is operating. They're not just managing domestic inflation and employment. They're trying to maintain the dollar's role as the global reserve currency while the foundation of that role is crumbling. It's an impossible task. And the fact that they're cutting rates while inflation is still above target tells you they've made a choice. They're choosing to protect the financial system and the dollar's international role, even if it means sacrificing purchasing power at home. What does that mean for you? It means your dollars are going to buy less. It means the retirement you've been planning for is going to cost more. It means the savings you've accumulated over decades are going to lose value in real terms. And the only question is whether you're going to do something about it or just hope it works out. Here's the thing about hope. Hope is not a strategy. Hope doesn't protect your wealth. Hope doesn't feed your family when prices double. Action protects wealth. Preparation protects wealth. Understanding what's happening and positioning yourself accordingly protects wealth. And right now, the action that makes sense is moving at least a portion of your assets into things that can't be printed, can't be devalued, and can't be confiscated. Gold and silver aren't perfect. They don't pay dividends. They don't generate cash flow. But they do something more important in times like these. They maintain purchasing power. They preserve wealth. They give you optionality when everything else is falling apart. And in a world where central banks are trapped, governments are broke, and the currency is being debased, that's worth more than any dividend. Let me give you a specific example of how this plays out. Let's say you have $100,000 in savings. If inflation runs at 5% a year, which is below where we've been recently, that $100,000 loses $5,000 of purchasing power every single year. In 10 years, it's worth about $60,000 in today's dollars. You didn't spend it. You didn't lose it in the market. It just evaporated because the currency it's denominated in lost value. Now let's say you took that same $100,000 and put it into gold. Gold doesn't pay interest. But if gold maintains its purchasing power, which it has for thousands of years, your $100,000 is still worth $100,000 in real terms 10 years from now. You didn't make money, but you didn't lose money either. You preserved what you had. And in an environment where most people are losing ground, preservation is victory. But here's where it gets interesting. Gold doesn't just maintain purchasing power. It tends to outperform during periods of monetary chaos. When currencies are being debased, when central banks are printing, when confidence is breaking down, gold doesn't just hold steady. It rises, sometimes dramatically. We saw this in the 70s. We saw it in the 2000s. And we're seeing the early stages of it now. Silver is even more volatile. When gold moves, silver tends to move faster. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been historically around 15-1. Right now it's much higher, which means either gold is going to fall or silver is going to catch up. And given everything we've talked about, which scenario seems more likely? The industrial demand for silver isn't going away. The supply constraints aren't going away. The monetary chaos isn't going away. All the factors that drive silver higher are still in place. And when the ratio starts to correct, when silver starts to catch up to gold, the moves are going to be fast and violent. The people who are positioned ahead of time are going to do very well. The people who wait until it's obvious are going to be chasing. Now, I want to be clear about something. I'm not telling you to put everything into precious metals. I'm not telling you to sell your house and buy gold bars. What I'm telling you is that the environment we're in requires diversification into assets that aren't correlated with the dollar. And gold and silver are the most liquid, most recognized, most historically proven assets that fit that description. You should still have cash for emergencies. You should still have investments that generate income. But you should also have a portion of your wealth in something that protects you if the system breaks down, because the system is showing cracks. And those cracks are getting wider, and the Fed just admitted they can't fix them. Think about what that means. The most powerful financial institution in the world, with unlimited resources and the smartest economists money can buy, just told you through their actions that they're out of options. They can't raise rates without crashing the economy. They can't keep rates low without destroying the currency. They're trapped. And when the Fed is trapped, you need to be prepared. This isn't about being pessimistic. This isn't about rooting for failure. This is about being realistic about the situation we're in and taking steps to protect yourself and your family. Because when the crisis hits, and it will hit, the people who prepared are going to be fine. The people who didn't are going to be devastated. And the difference between those two groups is going to come down to decisions made right now, in this moment, before it's obvious to everyone else. The smart money already knows this. That's why central banks are buying gold. That's why billionaires are accumulating precious metals. That's why the commercial banks are covering their short positions. They see what's coming. They're not waiting for confirmation. They're not waiting for the mainstream media to tell them it's okay. They're acting now, while there's still time. And you have the same opportunity. You can wait and see what happens. You can hope the Fed figures it out. You can trust that everything will be fine. Or you can look at the evidence, understand what it means, and take action to protect yourself. The choice is yours. But the window is closing. Because once everyone realizes what's happening, once the panic sets in, it's going to be too late. The premiums on physical metal will spike. The availability will dry up. The prices will gap higher. And you'll be stuck paying whatever the market demands instead of accumulating at reasonable levels. This is your moment. This is your chance to get ahead of what's coming instead of being crushed by it. The Fed just showed their hand. They admitted defeat. They told you through their actions that they're going to sacrifice the currency to save the system. And the only question is whether you're going to believe them and act accordingly, or whether you're going to hope they're wrong and pay the price later. I've given you the information. I've shown you what's happening. I've explained why it matters. Now it's up to you to decide what to do with it. And if you've made it this far, if you've watched this entire video, you're clearly someone who takes this seriously. You're clearly someone who understands that something is wrong and wants to do something about it. So here's what I want you to do. Go to the description right now. Download that free guide I mentioned. It's going to give you specific, actionable information about how to protect your wealth. And if you're an American retiree with at least $100,000 in any retirement account, you'll also get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just a chance to talk with someone who can answer your specific questions about your specific situation. This is only available to people who watch until the end, so mention you saw this video when you reach out. The time to act is now. Not tomorrow, not next week, not when it's convenient. Now. Because the Fed just admitted they've lost control. And when the most powerful financial institution in the world admits defeat, you need to be ready for what comes next. Get the guide, educate yourself, take action. Your future self will thank you.